Silver jumped 6% in a single day. Yes, 6. It shot up from the low 80s to an intraday high of 87.48 before settling near 86.90. No, it wasn't some glamorous short squeeze fueled by Reddit hype, a vault collapse, or a COMEX delivery hiccup. The trigger? The President of the United States just dropped a tariff bomb over the weekend. New 10 to 15% global tariffs on imports, following a Supreme Court decision that overturned the previous emergency tariffs, effectively reordered the entire global metals trade overnight. Now, before you roll your eyes at those flashy green candles and celebratory charts on TV, note this. This wild 6% surge is both the most logical silver rally in recent history and possibly the riskiest trading day of the week. Why? Because every signal that precedes a CME margin hike just lit up like a Christmas tree. History tells us that jumps this big during an active margin hike cycle rarely end well for the overenthusiastic bulls. So if you're popping champagne, hold your horses. The tariffs don't just shuffle paper around, they impose real costs on silver, which unlike gold, isn't just a shiny ornament but a necessity in industries like solar, electronics, electric vehicles, and even AI data centers. Tariffs boost import costs so domestic prices have to climb. Gold, with its mostly monetary and jewelry demand, barely budged, only 1 to 2% up, whereas silver quadrupled that move. Plus, the supply chain was already on life support thanks to China's export controls, clipping silver supply since January 1st, making the tariff bomb a perfect storm. India's scrambling too, paying a 16% premium over COMEX prices just to get their hands on silver. What does this mean for you? If you rode this rally, don't go throwing more money at it like it's a guaranteed touchdown just because it's green today. A CME could announce a fifth margin hike in as little as 48 hours, hiking maintenance from around $23,000 to between $34,000 and $39,000 per contract. Translation: your paper profits today could evaporate faster than you can say margin call. If you're holding physical silver, congrats. You're not at the mercy of these margin shenanigans. But if you're leveraged on futures, check your accounts tonight starting at 5 p.m. Eastern, and don't pretend you didn't get the memo. This tariff-fueled surge is a double-edged sword, amplifying both the fundamental shortage and the mechanical risks baked into the paper market. Prioritize protecting gains over chasing the spike. Otherwise, you're just lining up for a lesson in market humility. Silver is now trading at $86.90, up 6%, with the 48-hour margin hike watch well and truly alive. So verify everything. Manage your risk like your capital depends on it, because it does. And keep your eyes glued to those margin advisories tonight.